All righty, traders. We're live. We are live. Happy New Year to everyone. Happy New Year to everyone. 2026 is going to be a good year, guys. 2026 is going to be an amazing year, actually. It's going to be an amazing year. So, what I want to do in this live stream today is I want to cover a few things, okay? So, firstly, I see a short-term top coming right now when it comes to gold and silver. And what's going on for there. The next thing I want to talk to you about is the Meltup targets that I see coming real soon. I think there's going to be a real strong move coming out of the sector. But also, I want to show you something you can start to use in your everyday trading to help you identify when there is at least a warning of a drop to come. What do we need to look for in that? And the reason why I'm doing that in this session is because I want to show you factual evidence of what we should be looking for to say the stock market is topping, and now we're going to probably if we're going to get a drop on the downside, if we are, then it's going to be now. So I want to show you what to look for. So instead of you coming up with an opinion, which is probably going to be wrong most of the time, let me show you what to look for in the market in that through there. And then, hey, okay, 7-7. And then I also want to show you some really good trades that I'm seeing right now, setting up for 2026. And it's not gold, it's not silver, it's not the mining sector, it's not the stock market. And it's not TMF as well. So I'm just finishing my breakfast this morning. Now, let me bring this up to you guys. Let's go. Oh my goodness, I'm so excited, guys. I'm so excited. Because there is a lot of things that is coming down the pipeline. Okay, here. So let me start off with the typical disclaimer, guys. Don't place a trade based on what you're seeing in this session today. This is not a disclaimer. This is a fact. When you place, if you want to be more professional, how do professional traders think about their trading? Professional traders, people that had more experience. The non-professionals, when they get into the trade, they think about how much money they're going to make. One thing that's helped me now do really want a continuous basis is every time I go into the market, if you want to know how professional traders think, the number one thing they're always thinking about is what's my risk here? So when we're looking for a trading opportunity, they're always asking themselves, that's right, it's called themselves. Don't bother me, guys. They're always asking themselves, DEM self. That I'm cracking myself up here. What's the risk on this trade? If I'm wrong, what is the risk? So if you want to be a bit more on the professional level, like you want to tap into more like what the professional traders, how they think, the number one thing for you is every time you enter the trade is what's the risk here? Now, I know most of you guys are not going to think about that. And also, if you're looking, I've actually put together this massive johnsflashstyle.com. I've actually put together 5 of my top trading systems that I've used for the last 20 years in a big bundle here, plus a few bonuses at johnsflashstyle.com. So if you need a really good trading system or you want a good trading system, this number one trade, the short-term trading system here, I've been using for 20 years. This is my go-to system. This is what when I was $250,000 in debt when I first started trading for my first 5 years. And I went to a 7-figure mentor and he taught me this really simple system that utilizes one moving average. I spent 10 grand getting coaching from him. Now he taught me a lot about the mindset and so on and so forth. But in that coaching session that I did, where I spent 10 grand, he actually taught me this trading system. It's still my go-to trading system to this day. So you get that, but then also you get these other trading systems here as well too. And so, yeah, so I guarantee it, you're going to absolutely love this guy. So if you're looking for a good trading system this year, $4, go get access to that from there. Now, let's do this here. Let's do it. Let me bring up now. Alrighty. One thing I really want you to be, my question for you is this, okay? Question for you is this. Success in the markets is not about having a guess, okay? Success in trading is not about having a guess. So I could have a guess now. I think gold's going to top out and it's going to go to 0. No, you're not, John. You're an idiot. You're wrong. It's going to 10,000. That's another guess. I think that dollar's going to drop another 50%. Another guess. My opinion is that, you know what? Rates are going to hold here and they're going to go to the moon. They're not going to go down. They're going to go to the moon. And the bond market's going to crash. That's another guess, right? So you see what I'm saying? Like, everything that I just said there was backed by nothing really. It was just an idea. What I think is going to happen. If you are trading like that in the markets, well, I just know gold's going to 10,000. I just know it because of the debt bubble and the blah, 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 blah. Opinion. Idea. I just know it. For you guys that are day traders, how much money have you lost by saying, well, I know it's going to go here, and it doesn't? And you load up. They're all ideas. They're called opinions, right? There's no substance behind that. So, the only way for you as a trader of these markets to get ahead is to be able to have something, an actual thing that's going to give you the odds of actually having success in the markets. And that only comes from sticking to, I'm going to put it this way. You're trading now, when 2026 now. What is your number one go-to trading pattern that you trade every single day? For me, I have 3. I've talked about them in the last week or so in these sessions, right? But for you, I know for mine is always the top 3. It's a 52 moving average trade. I've talked about that a few times. Then we go to a thing I call a level 2 trade. I won't go to that too much, but it's a level 2 trade. And then my third one is more like a channel trade. So at least 80% of my trades this year are going to be based on those 3 setups. Why? Because I know most of the time, when I get these setups, 52 moving average trade, a high probability of seeing a move for at least a couple of weeks off that. I know that. High probability. A level 2 trade, high probability I'm going to get a move for about maybe a couple of weeks to a month off that setup. Beautiful. And a channel trade for me, depending if a channel trade sets up on a weekly chart, well, that could be a big mover for 6 to 12 months. I already know these things in the back of my mind. I already know these things. I know what I'm looking for. I know the setup. So it's not going to be luck that this time next year that I'm going to have a successful year. And I say 80% of the time because we're not perfect, right? We're not perfect. There's going to be times when you do take a thinking trade or an idea trade or the shiny object trade, right? We're not perfect, but you don't have to be perfect. I always leave it a little bit of wiggle room, right? As long as the most of your trading done this year is based off something that is rock solid, not just an idea, right? Because the problem with ideas is you've got to come up with a new idea every single time. But that's not solid. That's not solid there. So the thing for you guys, if you actually want this year to be good, and I know most of you guys watching right now haven't had a good 2025. right? And that's just the numbers. But how do we flip that? How do you actually, if you actually really want to do really well this year in 2026, well, your foundation, one, what I said before, how professional traders think, every time they enter the trade, they say, if I'm wrong, what am I risking? That's the first question. Not if I'm right, how much money I'm going to make. No, wrong question to ask. Because then you're like, well, if I double the risk, forget the risk, I'm going to make all this money. And then you lose all the money, right? How professional traders think. Now, here's the thing. Then on the flip side of that, point number 2 is, what are you looking for? Do you even know when you go to the market? Do you know exactly what you're looking for in the trading setups that you trade? Again, for me, I have 3 main ones that I'm trading. And under the umbrella of those 3 things is that's what I'm trading most of the time this year. And I know I'm going to have a good year this year. But that means also, what does a good year actually mean? A good year means what? I'm going to have some weeks and some months that are going to be quiet. They're not going to be many trades. And then I'm going to have some months where it might be, some small profits, some small losses. Because I'm going to have losses as well too, right? It's part of the game. It's okay. And then I'm going to have many months this year where I'm going to have these really big profits, where I'm going to pick up 200, 300, 400, 500% return. I've got one trade right now that over the next 6 months, if it plays out the way that I see it playing out, I mean, right now, it could be a really, like, we're talking 7 figures in profits here for me. Could be, potentially. We'll see, right? Next 6 months. So we'll see what happens with these markets. But the purpose of me telling you this here is it's not like getting lucky. Oh, let me go buy this crypto coin and put all the money in and hope it's going to go up. That's not success. So for most of you guys that are actually not doing well out of trading, there's a reason. And one of the biggest reasons is when you go to the market, you're just looking for anything that looks good. No, when I go to the market, I'm looking for a 52 moving average trade. Where's the pattern? Where's the pattern? See the differences. That's the differences. I'm looking for, where's my pattern? Where's my pattern? I'm looking for it. Where's my, oh, there it is. Boom. Take it. Make a good 50, 80%, maybe 100% return utilizing options within that trading setup, right? Good risk management, rinse, recycle, repeat. Then I'm back in. Oh, it's a level 2 trade. Oh, it's a channel trade. So every day I'm looking at the markets. I'm looking for my pattern that I know that works most of the time. Now, I say most of the time because guess what? I'm going to have losses as well too. And that's part of the game. But guess what? You never know when that loss is going to come, right? That's why I always go to point number 1, which is what? If this is a losing trade, if this is just part of the loss in the win-loss ratio of this trading setup, if it is this trade right now, what's my risk? What is my risk? And then boom. Now you start to lay the solid foundation of how successful traders really approach the market. And it's not a matter of getting lucky on one trade. Yes, I got it right, made a few $100 or whatever. Like, no. If you guys really want to start to top into the more of a consistent success this year and start to top into that range and get out of the 95% who don't make money, because I'm pretty sure that's the stats of what I've seen. I'm pretty sure they said it's like 95% of traders don't make money at all. I was there once. And the top 4%, so the top 4%, they're like breaking even. So they've gone from the 95 to the break even period. And then the top 1%, which are where I'm at right now, they consistently do really well from trading. From trading the markets, that is. We're talking multiple 6 figures per year, right? Continuously. That's where I'm at right now myself. And then you got the less than 1%, and they're the people that do like 7 figures or more every single year. My hope is that I was very close to it last year, the less than 1%, but I didn't get there. So my hope is this year I'm going to start to tap. My hope is this year is that I actually tap into the less than 1%, and I do 7 figures in profits this year. Now, 7 figures of profits from trading, not from investing, right? Investing is a completely different thing. I don't class my investment portfolio as the income that I've made, because it's neither here or there. I'm talking about trading activities, right? So buy and hold is not what I'm talking about here. An activity where you're buying, you're holding, and so on and so forth. And so my goal is to get into that less than 1% of people who do make over 7 figures in trading. And that's what I am aiming for this year. So that's what I wanted to start off with this session here today, guys. Is that right? Once again, before I get into these actual charts here, when you open up the charts, your number one thing, if you want to be successful, is, do you even know what you're looking for? Or are you opening it up saying, well, I think this is a good area to buy? No, you are going to lose a lot of money. I promise you. You cannot be successful at these markets just by having a guess, having a hope. Oh, let me just try this out. No, come on. Let's get real here. You really want to tap into... And now, by the way, when you start to think like this, you're not that far away from doing really well. Let me show you this here. Right? Let me show you this PowerPoint here. So there's a screenshot here that I got, and I want to show you this here. Think about this here, right? Here's a template here. This template is what's called 7 trades to 6 figures. Right? 7 trades to 6 figures. That means it's 7 doubles to 6 figures. It's called 100% return, right? 100% return. Now, here's the thing though, okay? 100% return on average here, right? Think about this as a template, not like, oh, well, you're not going to make money every trade. Okay, skeptical, go away. You're never going to make money from trading anyway, okay? But open-minded, what is this all about? This is all about, oh, I don't need 7 trades this month times 12 to make 6 figures if you're not making any money at all. So let's bring this back to thinking about, I'm just trying to show you here, this is 7 trades. Now, the reality is what? Firstly, do you even know what you're looking for? If you don't, this is not going to work, right? You go back off of a high success rate system, even if there's not a lot of, even if there might be only 20, 30 trades this year. On the back of that, that's enough for you, even starting with a small. Now, $1,000, this means that you've got like maybe a $10,000 trading account, right? You don't do $1,000 with a $1,000 trading account. No, that's not what this is all about, right? We're trying to be realistic here. But I'm trying to show you that what if you only took 10 really good high quality trades this year that met the trading plan that had a high win-loss ratio? What does that mean? That means, guess what? You're going to have some losses in there. Not every trade's going to be a double. That's 1 into 2, right? Sometimes it's going to be a 50% profit. But I've had many trades this year. In the last 6 months, I've had a 500% return, 280% return, a 300% return, a 250% return. They're more than doubles, right? So I'm trying to show you how to really think about this year of your trading. And why, if you're day trading right now, you are doing the complete opposite that's going to help you do really well. Because now you're trying to take 7 trades a week. Me, I'm trying to take, now for me, guess what? I'm trying to take maybe 20 trades this year. Around that. I'm going to have some losses in there. But I don't need 100 trades this year to make $1 million. I need maybe 20, maybe 25 with the right amount of money on there, with some losses, right? And so on and so forth. But I'm trying to give you a template of how you're not that far away. But how does this become reality for you guys this year? Right? It's what? What am I saying here? It's not on the back of having a thought, an opinion. Oh, there's an opinion. There's just an idea of this one market doing this thing. No. Once again, when I go to the market, I'm going to the market looking for my trading setup. I'm not, well, let's just see what looks good today. You're never going to get ahead in the markets, I promise you. Because now you're on the back, there's no solid foundation there. And throughout the year, you're going to have these ski curves and equity curves from there. So every time, and if you don't know what you're even looking for in a high quality setup, that's what you should be doing. If you go trade the market today, tomorrow, next week, whatever, this year, and you have no idea what you're looking for, you just open up the charts and let's see where a good support level is. You are not going to do well this year. I promise you this. Because success in trading for me has come off the back of having something that I can rely on. That's going to give me a high win-loss ratio. That's going to give me et cetera, et cetera, et cetera. So, with that being said, let's go to the now with gold and silver here. I was talking about this yesterday, but it does look like gold and silver is probably gonna, we're probably gonna see a bit more downside to come out of this gold and silver level. You can see here, right? For the last few times with gold and silver, we had these times, every time we had these, what's called these energy building phases, you can see the market goes up into an energy build. Energy building simply means it goes sideways. And I call these energy building phases because it's building energy to go for the next move. And then we go for the next move. And then it goes sideways for a couple months. It's building energy again to go for that next move. And then guess what? Then it runs out of energy. Then we have to go through another energy building phase. So the market needs to refuel, reset. This is what this sideways pattern here is. And then we break out. We go from the reason why we broke out, went for a good move here is because we had all this sideways period, which is called resting and refueling. And then bam, we go again. You can see this is how it works. But look what happened here. This is the amount of time that it needed to refuel to go for a move. Here, about 3 months. Here, about 3 months. Here, it was only about 2-3 weeks. So it didn't actually have a lot of time to refuel to go for a big move, where every single one of these were about 3 months. This is 3 months, 3 months, 3 months. And this one here was 4 months worth of what's called energy building, refueling again. So due to the fact that we actually had this only maybe 3 weeks, maybe 4 weeks of just a drop, not even a sideways pattern or a good few months of correction, and then we had to move up. That's the reason why it's failing, because we didn't actually have a lot of time to refuel to go for another move. Why were these big moves sustained big moves? Because they're coming off the back of a many months of just refueling, and then bam, we get going again. There. So if you're looking at what's happening with gold right now, gold didn't have a lot of refueling phase like it has done in the last 2 years. So therefore, that's the reason why gold is failing really quickly as soon as it broke above new highs. Where in the past, it didn't. It didn't because we had to fuel the energy to sustain the move. So coming off the back of these levels through here. And how I utilize that from a simple point of view is whenever we have a good, strong move, this is a weekly chart, good, strong, trending weekly chart, moving average coming up through here. If that's coming up through there and the sideways patterns gets very, very close to the moving average, this one here touch the moving average, this one here right near the moving average. If we can get right near the moving average, that tells me now that we've actually had enough time to refuel, and now we're probably getting ready to go again. You can see this is even through here, right? You can even see this point through here. This point through here was about 3 months. About 3 months with us, I went straight up, 3 months with the sideways moving average, and then that had to move through there. Same through there. Look at this here. Came up, went down sideways, and popped back up. So the moving average for me is one, it helps me gauge where the trend and momentum is. But secondly, it helps me gauge, have we had enough time to refuel to go for that next move? And you can see what's actually there. You see the reason why gold is failing right now and why these legs were sustained really quickly. But why is this failing really quickly right now? It's failing because, as you can see, this had 4 months of sideways and then we had a big move. This one here had a couple of weeks of down, maybe 3 weeks of sideways, and then bam, we kept going again. It had no time to refuel after this big move, and so therefore it only had. Think about it from a petrol tank, right? A tank in the car. If you go for a big trip and then you refuel full of tank, you're ready to go for a good move. And then you run out of fuel, and then you got a full tank of fuel, right? Full tank of fuel, and we're ready to go for a good move for another 1-2 months. Boom, 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 boom. Right? And you got and then we start to, guess what? And then we run out of fuel. We need to pull over to the service station and we need to refill again. But this time, instead of us spending time just to refuel the whole tank, we only put maybe 20, 30% in the tank. So it's still like 3/4 not full, because it didn't have a full tank. And then that's we had, and then we try to go again, and then we realize very quickly, like, oh, I'm running out of fuel very quickly. Why? Because we didn't actually have enough fuel here. So that's one of the reasons why gold has the potential, not a big crash out of gold, not a big major top, and I wouldn't be shorting gold right now, or silver. But if we're looking at gold from an analysis point of view, we can see the reason why it's actually failing right now, because it didn't have enough fuel, enough substance behind there. So that tells me that this moving average is probably going to catch up through here. And we're probably going to go maybe even do something like this here now for maybe 2-3 months. And then we can decide what's going to do from there. But that's the reason why that's failing right there. And then also, a bit of FYI as well too. So the moving average is so powerful. Trending means strong trend, strong momentum. Too far away from the moving average means it's the wrong time to be looking to go long, because we're probably going to start these correction phases. So too far away from it. Secondly, the sideways pattern here to the moving average helps me realize that we've actually had that we've had enough time to refuel to go for another move, right? You can see that's how these markets work. That's why for me, I get excited when I have a strong trending market and I see these markets just going sideways for a couple months. I'm getting excited because I know we're getting ready for another move soon from here. And then boom, away we go again. But notice also that whenever we do get too far away from the moving average, we have these big moves up too far away. That's when we start the correction phases. So if you see what's happening with silver right now, look how far silver is away from the moving average. And if you actually look at the actual past, even back through here, you can see now it's not an exact science, but you can see that when we start to get pretty far away from it, we never know exactly when the top's going to be. But just like even back here, right, just like even back through here, you can see here that when we start to get too far away from it, from the moving average, that's now going to tell you it's a warning sign that don't go long here, because we're getting ready for a correction. Now, there's a lot of muppets out there that have no common sense at all, and they start to overlay things. And I even saw it with silver just recently. Now they've gone very quiet. John, you don't understand. Silver's never going to drop because it's a macro and blah, 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 all this type of shit. Like, no. Look at the way these markets work. This is the truth about these markets, not an idea or a gimmick or a fad. So we can, one, help us understand what's going on, and secondly, stop us from getting into bullshit trades. It's likely to be a losing trade. And one of those things that I see so many people do is they get in after the move happens. And then they get in up here, it has a little move up, and then the market drops, and they wonder why the market dropped against them. So if you want to cut out, I guarantee you want to cut out at least half of your losing trades this year, check the moving average. This is a weekly chart. This is a weekly chart here. Moving average. I use a 24 simple moving average on a weekly chart. And on my daily charts, I use a 52 moving average. Thanks, Ted. But it doesn't really matter. You know what I mean? Like, it could be a 30 moving average. Like the number, there's no precise number here, right? It's just an average. It could be the 20 moving average if you want it. I just use the 24. And then on the daily charts, these are the daily charts here. I like to use the 52 on the daily charts. From the same point of view, one, is it trending up? Yes. Secondly, When we do get too far away from it, we're probably going to get a correction. Thirdly, when we do go through a bit of a sideways, have we got close to the moving average? Yes. So now we've had time to refuel. That's the reason why silver had a big move from here. Why? Because even though we had this big move up through here, the first move, it had a move up. The moving average was trending up. We started going sideways to the moving average. We refueled. And then we had a big move from here. So, and this, I used the 52 on the daily charts. The reason why 52 is because one of my earliest mentors, 20 years ago when I first learned the trend analysis of the markets, which is called the peaks and the troughs and so on and so forth, he used the 52 on the charts there, right? So first thing here, I'm trying to look at this here. When the market, yes, in a very big bull market, we want to go with the market, right? We want to go with the trend. But if the trend has been going up and we start to get too far away from it through here, we never know when the top's going to be. But what we want to see is, okay, this is a really bad time to get involved with this. We're getting too far away from it, and we've been going up now for a couple of months. We might be getting ready for one of those energy building phases again. And then long and behold, you don't go long here. You wait for it what? Here's the moving average. We wait for this sideways pattern, right? There's the sideways pattern through there. It gets close to the moving average. The moving average is trending up. This is also called my L-shaped trading pattern, by the way, where the market goes up. You can see it through here, up and then sideways and then up and then sideways. It's the L-shaped trading pattern with the strong moving average. Now, this here is where the market's had a time to rest and refuel. And then, long and behold, from that basing pattern, we get the big move. Why? Because we had enough time to refuel for the next move. Now, what is silver doing now? It's just gone through another refueling phase. So it might last another couple more weeks, maybe a month of gyrations, volatility, right? Because typically what happens within these periods here, you can see that we go through these volatile periods, right? They can be quite volatile in the swings here. So you can see back here, this whole energy building phase through here was what? And this here was the energy building phase. But look at this here. That was the point through there. That was the volatility through there. And this here was the volatility through here. So it can be quite volatile in these periods. So that's what we're doing right now. Guess what? We're too far away from it. It's the same thing. Rinse, repeat. Rinse, recycle, repeat. We're too far away from the moving average. We're starting to get a bit of gyrations. We're probably going to go sideways to a bit of a pullback now, just to go through a refueling phase and get going again. Now, if you have some people out there that come around these markets and they say, well, John, you don't understand because of the macroeconomics and this time's different and blah, 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 blah. Shut the hell up. Get out of here. Right? Now, everything has a win-loss, everything has a success rate, right? Think about how are you trading the markets? I'm showing you something that gives you a warning sign that I guarantee is going to be saving you at least 50% of your losing trades. Because you'll see the market go bam, 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 bam. And then you enter up here, right here. You're like, oh, yes, I'm the legend. But then you'll start to realize, here's the moving average and we're too far away. We then what? We then go for a big move. You're like, yes, I got it right. And then it does that on you. And you're like, what the hell happened? The market's rigged and blah, blah, blah. It's like, no, you got in the wrong time. Wait for the correction. I like to wait for what's called the L-shaped trading pattern. Strong moving average. Well, I like to see a strong moving average and then a sideways period. FYI, I'll show you this here. My last two trades that I did, non-investments, my last two trades on silver and the silver mining and the actual mining sector were indeed that. I actually went long on the silver market down here. So as you can see, here it is here. Market's breaking up, moving average comes up. I started entering longs here. And then guess what? Boom, 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 and the market goes up from there. I also, that was SI, and then I had also on SIL as well too. It's all the same thing, right, guys? Look at this here. So I had a really good trade on SIL. I made 280% return here on an option just last year. Why? Moving average is trending up. We went through what? One of these sideways gyrations. We break out. We've had a refueling phase. Now there's a high probability we're going to go for another nice move. Now, you know what's so amazing about what I'm teaching you here? It's one moving average and then understanding the market patterns. There's no confusion here. And if any of you guys are signing up to the MACD and the stochastics and all that other crap out there, no wonder you're not making money. I'm showing you one simple moving average on the chart wrapped around with some different phases, energy using and energy building phases and how they form. / when the worst time to be getting involved with something, when we've already had a very big energy using phase and we're getting too far away from it, up here is the worst time to get involved with it. Why? Because now we're starting to get too far away from it. And all this comes back down to what? Understanding the truth about these markets so we can start to have a bit more success on our side. And then long and behold, what ended up happening? We got too far away from it. People started entering in up here. Then they went through here. Then they started freaking out and getting out. And then so long and behold, the market does that on them. Now what's happening? We're too far away from the moving average and away we go. Right? You see that all through there. Now let me show you this here. Let me go to this one here. So the silver mining sector, same thing. Look at this here. It's all the same thing, guys. One, if we have a strong trending moving average, if the trend is up, go with that. Don't be trying to call the top right now. That's where you guys like it's like the stock market crash. No, stock market energy building. I'll get to that in just a minute. Now, what did we have here? We had a nice trending analysis. We went up. We went sideways here for a couple of months to the strong moving average. Strong moving average means strong trend, strong. I'm knocking my thing over again. I get too excited. Right? So here, right here, moving average going up. We had a sideways pattern through here to the moving average. That means we've had an energy building phase. We get to the moving average. So it says we've actually built enough energy. We start to break out and then we have a nice move here. Oh my goodness. Look, did you see the move? Yeah, because it had time to refuel. And then the market goes up and then guess what? And then everyone is now starting to see it all the way up through here. And then they're entering here. They're entering there. Then it has a little move up. And then the market drops on them like that there. And then they're wondering why the market dropped down. And now look what's happening here. So this is where you start to understand when I say gold and silver top, you understand why. Because there's a massive probability. If you look at gold and silver, oh, market's back open again. How good's that? Is it open? Oh, how good's that? Market's open again. There's a high probability that we're now looking for a very short-term top here. Short-term top, and then maybe a couple of months worth of sideways movement from there. And this is all I do, guys. This is all I do. I wait for this energy building phase, and then when it starts to break out, we've had enough energy to actually go for the next move, and then I'm looking to jump in on that next move. It's as simple as that. Can you look at SVM? It's a silver miner. SVM. Let's look at that. SVM. I'm not sure what you want me to look at it for, because we're in a strong upward trend, very strong upward trend. It's all the same thing in it, guys. Look at that there. Look at this here. Market go up, market have energy building, and then we go for move. Energy building and another move. Wait for the energy building phase. Let it build the energy to go for the move. And stop relying on central banks. So I'm not sure. Yeah, nothing wrong with this. We're getting pretty far away from the moving average. So this, and like many other things, looks like we could be getting ready for a correction. John, can you give us a quick analysis on Bitcoin charts? So many conflicting stories. And Peter, mate, that is your problem. You're trying to rely on stories instead of facts. Exactly what I've been talking about this exact whole time. I wouldn't be too surprised to see at least another one, at least right now, another downward leg off Bitcoin. And I wouldn't be too surprised to see Bitcoin maybe even come back down towards these levels down here somewhere. And then it might find a bottom from there, and then it might reverse from there, and then start to head back up. But everything's changed here with Bitcoin, though. Like, everything's completely changed. So Bitcoin's not looking too good from a trade. For you guys that are trading long-term, if you're long-term investing in something, you shouldn't care about these swings here. I'm a long-term investing in gold right now. I'm actually calling for a really big correction soon. 20, 30, maybe 40% correction over the next 1 to 2 years. I don't care about that because I see gold going to 10,000. So if you're an investor, you shouldn't worry about short-term swings. That's long-term buy and hold. As a trader, if you're trading the markets, you're looking for short-term moves, there is nothing here to say this is going to go up. Now, it may go up, but we're probably getting ready for another move down here. Silver has moved into the money realm now, so it will keep going up. Good story. The money realm, eh? That's what I mean by creating a story, hey? Well, I guess that particular person is long silver right now, and they hope it's going to go up. So they're looking for any evidence to say it's going to go up. Instead of, for the last 45 minutes, I've walked through the whatever. Let's go to here. Fuel tank analogy is well said. Oh, thanks, Ted. Thanks, man. Because the market is, you think about the market as an energy source, right? And the market does get pretty tired. And this is where, when things start to go way too vertical, it's called bubble. And then you get crashes, right? Remember, a crash from something, if something is going to crash, means it's too high. How do you crash? If you're an athlete in the market, if you're an athlete in the market, if you're an athlete Like me, right? I'm training. This morning I did interval training on the treadmill. I was doing 1 minute K, 1K on, and then a few minute rest. 1K on, a few minute rest. And I got up to my last K was 3 minute 50. So 3 minute 50 for 1K. And that was interval training. That was my very last 1K training. So, but I did interval training from that there, right? 1K on, 1K off, 1K off, and then I built it up. So I went from 5 minute K to 4 minute 30, 4 minutes, and so on and so forth. And my very last one was, you guys that are runners, you probably know what I'm talking about. But guess what happened? That whole thing there, along with a bit of a warm up at the start and so on and so forth, took me around 50 minutes today. I did that this morning, around 50 minutes. And then to finish off, I jumped on the bike and I did an easy bike ride for 20 minutes to let the legs flush out. Guess what happened afterwards? I crashed. Why? Because I exerted so much energy, especially in the interval training on the treadmill today, doing the interval training, especially that very last one where my comfort zone when I'm running is probably around the 5 minute mark, 5:30 mark. That's my easy zones when I'm running, right? I can push it into the 4:30s if I wanted to, if I was racing. But when I start to tap into the last one, where the last couple of Ks that I did was like 1 kilometer for like 4 minute Ks, set the treadmill at 2 hours. So I'm doing 4 minute for 1K. And then the last one, which was now 3 minute 50K, I'm exerting so much energy. So then I crashed. After that, I went and sat down, and for about 20 minutes, I just laid there and started doing some stretching and just let the body start to unwind. The same thing happens to the markets. When the market has too much movement, too much vertical move, that's when crashes happen. Crashes don't happen when the market's not doing anything, right? So that's where with silver, you get these violent moves that happen from there. So let me so 24 moving average. Silver going down. Yeah, but we're still in a very strong upward trend. We're going through that next phase, right? We're going through the pullback phase. Doesn't mean the trend's over. Understand what a trend is, right, guys? You guys know the trend is your friend until the end. But what actually is a trend? People think the market going down is trend over. No. Technical analysis 101 is higher highs and higher lows, right? Up and down and up and down and up and down. We know that. This is an upward trend. No, John, tell me something new. Well, if you know that, when the market goes through these phases through here, and the market's going down to create the higher low, it's not the market crashing or the market reversing and the trend's now down. No, it's going down to make the high low. How do you think a higher low is formed? It has to come down here. Come down here. So the big thing that I'm seeing when it comes to a lot of people that are just new to the markets is they think the market going down for a couple of weeks or a month, there's a big downward trend and the market's going to crash. Like, no, it's coming down to form the higher low. That's what happened with Russell just recently. You saw what happened with Russell. Russell broke out to all-time new highs. It pulled back. It was pulling back to create the higher low. And people thought, actually, I had one guy call me insane. Right? Look at this here. This is the Russell. Look, up, here. It pulled back to create the higher low. So it has to come down here to create the higher low. Then we go back up again. So a leg on a down or up is nothing. And we get that. So silver dropping right now is not change of trend. It's just a short-term top. Way we go again, right? So that's all it is. That's all it is, guys. That's all it is. And that's where there we go. MKO. Silver going down. Fucking hell. Who cares, man? Expect it. It's not like it's not going to go down. It's not going to go straight up. Look at the chart. We go through what? Swings. Market never just goes straight up all the time. That's why it's so important to get in before that next leg up if you trade in the markets. Now, MKO, you said, I've been profitable in my trades, but I don't trade options. So the gains were not massive. Well, that's the reason why I trade options myself. But options can also amplify your losses as well too if you're not smart. Right? So if you do the wrong thing with options, you can start to have 70 and 80 and 90% losses overnight if you choose the wrong option and you get into the wrong trade and you put too much risk on your account. Before you know it, half your account could be gone in 1 week if you don't understand the options behind it, right? Options are good if you get into but it's the trading setup first. Options don't make me money. Me getting into a good trade makes me money, and then option gives me a bit of that bit of leverage from there. That's all it is. So let's go to now. One thing I really want to walk you guys through is this, okay? I said here, so melt up targets. I talked about this in the actual title here, but I want to give you my melt up targets. How am I going to get my melt up target? Right? I am just going to do something which is really simple, and it's called a channel projected target. What does that mean? Well, whenever sometimes we have these channels through here like that. There's a bit of a channel, right? The channel there. So what you do is you measure from the high to the low, right? You project that out from there to there, and that's called a channel projected target. But also, we can use downward and upward channels. If we have an upward channel like this here, and the market does like that there and starts to break up, like stock market, then what we do is we measure from that point there to that point there, like so. We project that up, and that gives you a target. So channel, doesn't matter what it is, when it breaks, especially when it breaks, and then we hold like we are here, channel projected target. So the projected target of the channel, which is the channel, not my idea, is this. From there to there is the level that we see, right? Straight up and down from there to there. You project that out from there to there. And to me, it looks like from that whole level there, looks around that 8,000 level. 8,000 is likely to be that level there. So what does that mean? No, this is not the top. I'm going to get to that in just a minute, okay? Anyone calling a top right now is going to be... Anyway, so the way this is working right now is different phases in the markets, right? Energy using for a while. Now we've gone through an energy building phase. Guess what's coming now? If the market holds here and starts to pick back up through there, guess what? We've now come off the back of an energy building phase. And from the energy building phase comes enough energy to being built, gone sideways. When it starts to break out like here, we're now likely to be releasing all this energy, and then away we go again. And it looks like around that 8,000 level could be the target on this next leg up. Now, what we want to see, a bit of confirmation that that's likely to come, is we want to see a nice high low here, right? We want to see, we are starting to break out here. We are starting to see a nice upward trend. So what do we see here? Lows. There we go. There's a low through there. So we want to see another higher low here. We have a high and a higher high. If the market holds through here and starts to break up through there like that, this is now another higher low through here, like it is through here and here. We're breaking out. If we get something like this pattern through here, this thing through here, if this forms over this course of this next couple of weeks, I feel sorry for the shorts, because this energy that's being built right now is about to see an absolute gun-ho big move to the upside. So that's what's happening right now in the stock market, and I wouldn't want to be fighting it. Oh, geez. Would a 3-month out of the money long straddle or 1 month in the money long straddle be considered for taking a position using your strategy? Would this cover any losses if things go against you? No, it's called taking the loss. You can't protect yourself by things go against you. And by the way, Ted, if you are trading like that, I don't know how you have long-term success by trading like that. I just simply buy the option, by the way. I don't do straddles and spreads and all that sort of stuff. No. Why would I? I'm limiting my profit. What do? What have I done? And what did I do down the bottom here with the SPY when I talked about this a month ago? I bought call options. I just simply bought call options. My main position was in the money options, and I bought it. And a 3-month option, probably way too short. I've got just over 6 months worth of options on this one here, because it may take that long for this thing to form out. And a 1-month option, remember, what are we doing here? Right? Reason why I just buy the option is because if I'm wrong, I can get out for a loss. But if I'm right, like for example, if I'm right and this actually happens in the SPY, if I'm wrong, I might have a losing position of around 40, 50% on that investment. Not on the account, on that investment. Okay. And I'll use these numbers here as an example here, right? This is the reason why I like using options here. Let's just say, for example, I'm in this position here. I'm up about 20, 30% now on this one here. Roughly around there, maybe 20%, right? On this SPY trade as an example. I'm going to use the numbers here, okay? So let's just say, for example, this thing comes back down the bottom here, does this sort of thing, and I have to get out, okay? I might get out for, I've got 6 months worth of time, and it comes back down the bottom here, and I have to get out, okay? I get out for, call it a 30% loss. This is where the numbers start to get really good here, okay? Let's just say I had a $100,000 trading account, and I took 10K, and I placed it on this account, this trade here, okay? If I am wrong, so let's actually do this here. If I'm wrong, a losing position would lose me anywhere. I would have to say, because I'm in a good position right now and I've got it's in the money down the bottom here, maybe 30%, right? So call that $3,000. This is where it gets really awesome, right? So right now I could be risking 3, maybe on a big loss, it'll be $5,000. I'm just using this from simple number perspective so you can understand the reason why I trade the way that I trade. All right. So this is the risk. This is what potentially one could lose. Right. I'm using just a simple numbers here so you can understand how this works. So in the back of my mind, if I only had $100,000 in my account and I did a $10,000 trade here, one, I still have 90% of my account there to do other positions, which I do. So that's the first thing. You don't load up 100% of your trading account utilizing options. So the first thing is what? What's my risk on my account? Okay. I'm risking maybe 3% on average, right? Maybe 5% if this is a big loss on this position here. Okay. I understand that now. Remember the first question, what's my risk? Now, let's just say that I'm right over the next 6 months and this does start to make its way up to that 8,000. Well, this $10,000 position is now probably going to be worth 300% return. So that would mean maybe even more, probably a lot more than that, right? But I'm using, call that say 300%. So my profit here, my profit is $30,000, which is a 30% increase on my account by taking around about a $3,000 risk, which is a 3% risk. Because that's probably what it's going to be by the time I get out of this. If it does continue down, if this happens like this here, then I'm probably going to get out around about that 30% or so loss out of that level. Stop working, get out. Okay. But even on a maximum level there, if that does work, I could potentially do $30,000 in profits, which is a 30% growth on my account, by taking sort of a big loss would be a 50% loss, which is a $5,000 loss. I can't do that with spreads and all this other crap, all these other strategies you can do with options. Keep it simple. I have my losses small, but I want to be able to, when I get into a good trade, I don't want to limit my profit. If you're doing spreads and these spread strategies, it's the worst thing out there. For me anyway, for me. Because the number one thing for me is always I'm looking to limit my risk. The reason why I like to trade options is this here, what I'm sharing with you here. I can take a 2 or 3% risk on my account and potentially grow it by 30 or 40%. Especially when I start to get into these really big 2, 3, 400% moves over the course of a couple of months. This is when you can start to really make some big swings in your account by taking always small risk and always aim for big profits. And by utilizing options the right way, it allows me to do that. That along with trade selection and proper trade management. And that's why I love. So that's what I'm doing right now with this trade here. Right? One, I don't have a big position on my account on this one here. And secondly, the whole thing that I just walked you through there, that's how I do my trading. So even if this one thing is a loss, this position here on my trading account's maybe down 3%. If it's a profit, my whole entire trading account, now I have a lot more than 100 grand in there, but just for using that number sake there, right? Think about that, right? I'm risking a couple percent on my trading account to then potentially have a growth of 20, 30, 40%. When you start to have that as the spread, I'm risking 2 or 3%, maybe 4% on my account to potentially make a 20, 30% growth on my account. When you start to do those numbers, you set the game up to win. Boom, boom, boom. But that's just how I trade anyway, right? I'm always after I'm trying to have big profits. When I'm in a really good trade, I want to hold that thing as much as possible to have a big profit, not these small. And that's where a lot of these iron condors and straddles and credit spreads and all these other strategies out there with the options are just crazy. So MKO, man, I hope you understand, man, that it's all got to do with everything, right? Trade selection, trade management, and so on and so forth from there. Let's go to, just give me a minute, guys. Give me a minute. Right. Um, of course you can set a stop loss on the option. Of course you can. Now, what I have found is I don't set profits. I don't. The option swings in the option itself is not what I'm utilizing to get in and get out of the market. I will get into a trade and then I will read the market to tell me whether I should be out of this now for the loss or whether I should be out of it now for the profit. So I don't set a stop loss or profit target on my option there. People think that that's nuts. That's the only reason why when I'm trading, I don't have a large percent of my account in the markets there. So I will let the chart tell me when it's time to get out of it from there. So I wouldn't, for me, setting a stop loss, because what can happen intraday, for example, I'll give you a real life example. There were 2 trades last year that did just over 40% loss in the first week of me getting into it. So I got into these positions here, and they went against me, but the trade told me to stay in still because it's like, no, this is probably going to kick back in the right direction here. So they're around 40% midterm through the trade. So if you had a stop loss, you would have got taken out of those trades. But because I knew it still didn't tell me to get out with those trades. Within 2 months later, I made, what was that, close to 400% return with these 2 trades combined. Well, one was close to 300, and then there was almost another 100% return there. But that, as you can see there, that it was the chart that told me, and this is, you got to understand what you're looking at too as well, too. You don't just make something up. The chart was telling me that by reading the markets, it told me that it's not time to get out yet. So, and then therefore, that's the reason why. So for me, I just keep it really simple. So, what I want to do in here is I want to show you something here, okay? So in the title of this video, I talked about top crash patterns and so on and so forth, okay? What will happen if this is going to be the top in the markets here right now? Because there's so many people out there. There's people out there that are calling for a top right now. And I want to show you how do you actually use something that has substance behind instead of a divergence that's happened. Oh, I'm laughing, guys, because there's people out there that's saying that there's a divergence happening here on the daily charts. And the divergence, this is the divergence right here. Like the divergence is here. And they're saying, well, there's a big divergence happening right now, like this here. And so therefore we're going to top out up here. That's their theory. And my thought about it is that if you're trading divergences, what happened to the first one? What happened to the second one? What about the third? Is it the third time's the charm now? Now the market's going to reverse? So that's what they're using for substance to calling a top right now. So what? The first 2 didn't work, but now it's going to be the third time that does work. So you call the top here, it didn't work. Call the top here, it didn't work. Call the top here, and it still made a new high right now in the markets, as we just did in the stock market. So That's where I'm seeing a lot of people on the YouTube's doing that analysis. But if you actually look at the divergence, yes, they're calling divergence, but there's been like 2 or 3 or 4 or 5 divergences as we've experienced this big up move in the stock market. So there's been divergences as the market's going up. Who says that divergence is going to kick into play? It's like, what? Now after the fifth divergence is going to work right now? What? No. So look at this here. Let me show you this here. In an upward trend, as long as the market makes these higher lows in place, we're in an upward trend and there's not even a warning sign of a drop to come. Let me show you what I mean here. All right. So market goes up. Right. We come down, higher low, and another higher low, right? You can see here we're making these high lows. As long as these drops here don't break past these lows, this is called a higher low period, and a higher low and a higher low. But if the market stops doing that and then we get a drop down past this low, we're no longer making higher lows. And when this happens, this is the time we actually have something to tell us of a warning sign of a drop to come. Not before, not after. So let me show you just in these bull markets here how this has worked. Right? And this is where a lot of traders are calling the market now top. And I'm like, no, there's not even a warning sign now. And I'm showing you the chart, not my idea or opinion here. Look at this here. Down, low, higher low, higher low, higher low, higher low, higher low. Then what ended up happening? Then we came down through to here, and that point was breaking that low there and that low there. This is the point right here that gave us an actual thing on the market to tell us now we're getting the warning sign. And then what's happened? And then we started to go through this downward phase. But it wasn't until we got that breaking of the low, we're no longer an upward trend here. So, and then the same thing for this bull market. Look at this here. And then we went through another bull phase. What is this? Market's gone up. Let's use a green here now. Higher low, up, down, another higher low, up, down, another higher low, up, down, another higher low, up, down, high. And then guess what? And then when we broke it right here, that was the point to tell us. And again, this is a weekly chart here. So as it was happening here, that's the point that says now we have something in the market to give us a warning sign of a drop to come. Not before, not after. We can't pick this top being here and this top being here. If you are, you're a gambler and you're having a big fat guess. And by the way, when you do that, you are wrong 4, 5, 6 times and then you get it right. You are wrong 4, 5, 6 times and then you get it right. So if we actually want to have something in the market to tell us that this is the top and we're going to see a bit of a drop, whether it's going to be a flash crash like here, or whether it's going to be a bit more like a bear market like here, where the market's just gone down on lower highs, lower lows like that through there, the market will stop in it. The market will reverse the upward trend. So I'm showing you here for the last 5 years what has been the thing at the top that tell us now we should be concerned. And if we're not getting that, you are making something up and you're going to be at least 70 to 80% wrong. So what's happening right now in the markets? Well, what I just shared with you here. Oh, look at this here. We did Where'd the thing go? Look, up, down, higher low. So unless we start to break this point right here, you don't even have a warning sign of a drop to come. And if you are, you're having a big fat guess. And guess what? You have a over 70% loss rate if you're calling a top right now. Especially if you're short in the markets right now. Good job in trading something that has a very low win-loss ratio. I'm trying to show you, if we actually want to be worried about a downturn, what do we look for? It's what? The market will go low, higher low. It'll stop making higher lows here. Low, high, low, high, low, high, low. It'll stop. It'll break the low. It'll no longer make higher lows anymore. I know this sounds really simple, guys, but am I wrong here? No, this is facts. When do we have the right to give us a warning sign that a drop is to come? And I'm showing you what to look for. We can't call a top right now because we're still in a very big bull market. So if you're calling a top right now, or if anyone out there on YouTube is calling a top right now, they're having a big fat guess. And most of the time, they're going to be wrong. And once again, I want you to trade on probabilities, not certainties. Meaning, what? Don't trade reversal patterns. So I'm showing you right now, there is nothing on this market here. And then let's overlay something else to give us that. To give us an actual thing, to give us an actual truth reason of we should be worried about a drop in the stock market. Firstly, I showed you just by what the market does to give us a warning sign that, okay, if we're going to get a drop, it could be now. Last 5 years, every drop has started with that pattern. We haven't got that. Second thing we can start to overlay is what? When the moving average here, this is my 24 moving average. When the moving average goes up and we start to flatten out. See that through there? See how it starts to flatten out? Goes up and we start to flatten. See how it starts to flatten out through there? So the moving average is like a momentum indicator. We went up, 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 and then we started flattening out. Up, 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 and then we started flattening out through there. So the flattening of the weekly moving average overall says, oh, the momentum is slowing down now on this here. So the trend of the market movement is saying we're slowing down. So if we have those two things in place, yes, now you have something to give you a high probability of a drop to come. But not right now. No, there's nothing here. And again, guys, listen to the market. When the market starts to give us an actual warning sign of it dropping coming, and if you go down the rabbit hole of divergence and double tops and heads and shoulders and false breakouts and all this sort of garbage out there, and the divergence indicators, and the debt bubble, and and it's the election year, and oh my goodness, and the market still makes a new high just recently. Good job. Don't go against it. What are we calling tops for? When you've been right 2 times in the last 5 years. You probably have no money left if that's the case. So no, there is no crash. And if there is, I'm giving you something you can use for the rest of your life, that if the market is going to start to turn into a downturn, we will get these patterns here. And I'm trying to show you from a factual point of view, not a thought, not an opinion, not who cares what I think. I'm trying to show you what the market does at these tops. Don't fight the market. And I'm saying that because I know there's people out there that are looking for shorts right now. It's like, now, if you're a day trader and you're looking for a short-term like day trade, that's different here, right? But if you expect this to be a top before a major 80% collapse, Don't do it. What are you doing? And then on top of all of that, now we're coming off the back of a few things here. Firstly, on the daily chart, the small trend, low, higher lows. We're developing these higher lows. And then secondly, we're coming off the back of these really big energy building phase because we just come off. Yeah, good job on you calling a top right now. Remember, guys, I'm a trader first and foremost, right? I need to see what's the truth about these things so I can make good decisions. Because if I can see the truth about what's going on here, I can actually make really good decisions and I can make money. The big thing here is we come up with an idea that has no substance behind it, like the top's in right now. It's like, don't be a monkey. If you want to be right at least 7 times out of 10, what's this fascination with calling tops? Anyway, so that's where we're seeing everything going right now and what's going on here. I suppose since you already have a max loss set in options, you already know your max loss. Cheers for explanation. Well, the thing for me, Ted, the way that I like to do it is I like to make sure that whatever I put into the option, if the whole world goes belly up and I lose 100% of this position, I'll look at it if I'm going to be okay. So if I use, like for me in my size account, I'm not probably around that 5% mark is a good sweet spot for me, right? But it's a large number as well too, as an example. So as an example, in that case example, if it's 5% of my account into the option, as an example, I know if I lose 100% of that option, my account's only down 5%. If I have a big loss, it's going to be 50%, which is 2.5% risk on my account. Now, if I start to pick up a good 300% return, my overall, I've got a pretty large trading account. So my account has grown by 15, 20% from having a 2.5% or around about 2 to 2.5% max loss. So I hope you can see, like, even with a large trading account, right? So you had a $500,000 trading account and you're trying to make sure you only take a couple percent risk on your account, but have the potential to grow 20, 15, 20% maybe on a trade. This is what I'm doing here. So, and then again, as before, so if I put 5%, the entire thing disappearing, which if you buy plenty of time, that's why I like to buy plenty of time so it won't disappear. A big loss on that case, 5% of my account, a big loss would be 50%. That's 2.5% risk there. The average loss, so for example, here, the average, a good loss for me, an average loss would be 20, 30%. So now, whatever that works out to be, right? So, I could be risking 1 to maybe 2% of my account in that situation to potentially grow my account by 10, 15, maybe 20%. So I'm risking maybe a 2% of my account to potentially have a 10 to 15% growth. And when we start to talk big numbers here, that's a pretty good growth. And that's why I'm always trying to utilize that. So whatever I'm looking at the markets, and I'm trading these options here, especially with a larger account. The $100,000 was a much smaller number that I'm utilizing here. But when you start to do well and you start to have a bit more money behind your trading account, I'm trying to show you how I position myself so I can protect my downside if I'm completely wrong. Like, for example, if I do 5% of my account as an example, and the whole thing goes belly up and I lose everything on that one position, well, I've still got 95% of my account there. Even if I had 10% of my account going there and the whole thing went belly up and I lost the whole position, well, I've still got 90% of my account there. I'm still good to go. Which again, and that's the reason why for me, Ted, the reason for me is a few things. One, my main style of trading is buying in the money, first or second in the money. So they're more expensive, but it gives me a buffer, one. And secondly, I buy plenty of time. With that, if I'm wrong with the trade, then I can start to pick up a good 20, 30% loss. But if you buy too short of a time, so for example, on my S&P 500 trade, I bought in the money options. My main position is in the money options, which is more expensive. It was, but then also I bought at the time I bought over 6 months worth of. I bought 6 months worth of time to allow this thing to potentially unfold over the next couple of months from here. So it's the trade, but then looking at the market for my position sizing. But then also the type of option I'm buying. Because if I bought out of the money option and only 1 month at the time, that might not be enough. This might not do much for a couple of weeks. It might just continue going sideways for a bit here. That may happen. What happens there? And if I buy out of the money, now my whole position's down by 80%. I haven't given it enough time. So by factoring the position I'm in, one, the buying in the money, which is more expensive, and buying plenty of time, all these things is controlling the risk on my account. And that's where, like, even if I had 10% of my trading account in, say, for example, the S&P 500, if I'm wrong, that's where I can get out with maybe, a 20 to 30% loss on that option because it's in the money and there's plenty of time from there. So this is what I'm always trying to do that from there. So yeah, I hope that makes sense because the point is this here, right? We're going to have some losing trades throughout the year, and I don't know which one's going to be that losing trade. So as I'm taking all my positions within my trading account, and investing, guys, is buy and hold long term. Okay, you got more like a 5-year view. That's for me. Metals and miners, that sort of stuff. That's more like buy and hold for 5 years. Who cares what happens with the swings ups and downs? Okay, it's a different. I'm talking trading. I'm talking like this here is when I trade this year, and throughout this year, I'm going to make a lot of money from trading. And this is when I pull money out to pay taxes and live off and so on and so forth. That's what trading is, right? Now, trading is not regular income, right? Because some months I might not have any trades. And then some months I might have a lot of trades. This is the big differences here, right? That's what trading is really all about for me anyway. This is the way that I like to trade myself. But throughout the year, I make a lot of money because then there's periods of these months where I do really well, and then those start to stack up from there. So I love your live stream, Sean. Hey, Sunshine Girl. Are you a female? Sunshine Girl? I'm guessing you are, but I was about to say thanks, mate, but I'm like, let me stop myself and then go from there. Sunshine Girl, maybe. You're from Perth? How good's that? Well, welcome, Sunshine Girl. And secondly, thank you so much for your kind words. And thirdly, I hope that these live streams that I've been doing lately, and if you've been catching up on the replays when you haven't been able to get live, I hope they've been giving you some really good things to think about, and all these things I've been sharing just it gives you at least try to give you a proper step in the right direction with your own trading this year. That's the whole purpose about it all. So thank you for that. Oh, fantastic. Yeah, as you can see, Sunshine Girl, I normally just do the recorded videos, as you know, but I don't know what's gotten into me. So a bit of over the Christmas and New Year break, call it a Christmas and New Year break. I thought, you know what? I'm going to start to do some live streams and just talk about all this stuff that I think about, how I trade the markets, how I look at the markets, and hopefully some of the stuff that helps you guys as well too. So, and then sometimes 3 hours later I'm finishing. But anyway, I love it. Please see your last videos since the December 24th about the Meltup and Center rally. Those who followed it and took longs, they will have. Please see your last videos since 24th about Meltup and Center rally. Those who followed it and took longs, they will have a sad new year. Do you know that Fed has blah, blah, blah? Okay, come up with some story, the reason why the market's not going to go up. Okay. You're right about blah, 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 blah. Okay. All right. They need to talk to you, man. You're coming up with some story, blah, 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 blah. Oh, all right. I'm not going to entertain that. Have you ever considered 2 years out of the money? Just thinking out loud. Why? 2 years out of the money? Not on the stock market, because I'm expecting after the stock market goes up, we're going to see a really big 40, 50% correction. Why would I be thinking 2 years out of the money when I'm expecting that sort of thing to happen? Love your content. Thank you for the stream. Oh, appreciate that. Thank you, sir. Appreciate that. Remember, guys, what I teach you here, I want to sort of point out something here, okay? I want to be able to give you something that you can use for the rest of your life. So trend analysis, moving average, the energy using energy building phases. These things you can keep using for the rest of your life because it's not a gimmick. It's not a fad. It's not coming up with some BS story right now of why the top of the stock market is and the market's going to crash. Let's just say you do come up with some story. The Fed's going to do this and the debt bubble and the explosion and blah, 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 blah. You come up with some story of why the top's going to be in and you short the market right now and you get it right and you make $1 million. Oh my goodness, you are a legend. Now, when that trade's finished, what do you do then to make sure you can keep being successful? What? You come up with another story, another idea? That's called no foundation, no substance behind long-term success. Because what happens with that person who gets it right and not based off things that actually give you probability? What happens? They get it right. They make a lot of money. They put the cape and the ego on. Here we go. I'm a legend, blah, 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 blah. And then 12 months later, their account looks like a big ski curve. They make a lot of money really quickly, and then they got it because they got it right, and they're a legend, and this is easy. And then on the other side of the ski curve, it comes all the way crashing down. I don't want that for you. I'm all about utilizing. How do we utilize things that give you a good high probability of having a successful trade? Like when the market gets too far away from the moving average, don't trade right there. It's a low probability time, right? Also, when you are trading, how do you make sure that you're applying a small risk on your account? So if you are wrong, you can have a couple % risk on your account. And if you are right, how do you end up potentially having a 10 or 20% growth on your account? Like all of these things here. Just give me a minute, please, guys. I'm back, guys. I'm back. Alrighty. So, what I want to do now for you guys is I want to show you the opportunities that I see right now for next year. Next year. I can't say that. This year. Right. So I want to show you the opportunities that I see happening right now. Now, this is what I see right now. As the months go on, I'm obviously going to start to see other opportunities that I trade and so on and so forth. But I want to share that with you here. One of the biggest things I've learned from you so far is pulling the chart view back from 15 minutes to 1 day intervals. So much less noise. Yes. Filter. That's the reason why also I look at the weekly chart. Makes sense? Because if most of my trades are swing trades, I'm looking for big moves over the course of a couple of months, a couple of weeks, and a couple of months. So exactly what you just said, that's one of the reasons why most of my view is looking at the weekly chart, because it gives me a clearer trend, gives me clearer moving averages, and so on and so forth. So yes, you're exactly right there. The smaller time frames can give you a lot of noise, and this is where people who day trade and they're only looking at a 1 minute chart or 2 minute chart, there's a lot of noises, false breakouts, and they end up getting sucked in and so on and so forth. But for me, you can see from today's session, I've talked a lot about the weekly chart, because the weekly removes a lot of the noise and gives you the truth about what's really going on there. So good job, man. Good job. Both gold and silver gapped up. Not great candidates for shorting. Well, I wouldn't short gold and silver right now anyway. Next year is different. It is midterm US president, so we will not crash. It'll be an up year. So you start off by giving me shit for my long calls, and now you say the market's going to go up. Good job, man. And by the way, next year, US president's next year? I thought it was this year. Come on, man. Let me bring on my TC 2000 in for a minute. Yes. Well, the thing, Filterman, what you said there is, no, it will go down. Okay, cool. Well, what you're saying right now, I have something fact right now in front of your face that says you are going to be at least 70% wrong with what you just said there. Right now. We're not talking 6 months from now. We're talking right now. Okay? So good job on trading something that has a 20 or 30% success rate. You're going to go broke by trading that way. Why would you do that? And by the way, midterms, of course, we're going to see corrections in the markets. But when 6 months comes around, then we can see what the market is actually telling us there. Let's go to here. Okay, cool. I'm not sure how you're coming up with that, but that's a really good idea. And I've never made money on just saying, well, the market's going to go down first. I mean, clearly right now, I have something that I've just shared with the group that's going to give you a 70 to 80% success rate of the market going up right now. And then maybe 20% success rate of it going down. So again, good job in trading something that has a very low win-loss ratio where you're going to be wrong most of the time. Good job. Not for me. Not for me. Now, let me go to my TC 2000 platform. I don't get it, guys. I don't get it. Why do people approach something in a way where they know most of the time they're going to be wrong? And what is this thing about calling tops in the markets? Is it an ego thing? Yes, I called the top. And then 12 months later, they lose all their money. What is with that? Oh, oh well. That's why I'm around. That's why I'm still here, guys, after 20 years of trading the markets. Because I don't get lucky every now and then. I have years of foundations of when I do have losing trades, how to protect my account. When I have winning trades, how to grow my account. Foundations of long-term success. And I definitely don't trade something that's going to give me a 30% win ratio. Let's go to here. Hey, John. Oh, yeah. And this is why, guys, most people don't make money, right? Because I've spent so long talking about these strategies on my YouTube channel. And people that watch me, they see what I say and they see it's a fact of what I'm saying here. Like, if we're worried about a drop in the stock market, this is what we need to see. And until we get that, there's no reason to call it. We're not even getting a warning sign of the drop to come. But yet, they want to be the ego person and start to trade the way and do reversal patterns and so on. So let me do this here. Bogue, John, how can you make money when the market is going down? There are parts of the market going up at the same time. Of course. That's why I never have a blatant statement across the entire markets because that's not true. Some markets right now have been going like Nike. Look at Nike as an example. While the entire stock market's been booming, Nike's been in a very big bear market. So I don't actually have, this is just an example here. Adobe's another one. Look, Adobe, same thing. Very big bear market here, especially this last couple of years. So I don't have a view on the entire market. I have a view on what that market is telling me. For example, if I'm looking at the S&P 500 as an example, I have a view on what that market, what the S&P 500 is telling me. The S&P 500 does not equal Microsoft right now or Nike. That's Nike there, and this is Microsoft. They're actually doing different patterns. So what I look at it is from not an all market perspective, but from what that chart is telling me perspective. I don't say stock market is going to the all-time new highs and big melt up, and therefore all stocks are going to do that. That's the wrong thinking now. Because all markets are in their different phases through there. UNH, look at UNH. Now, these stocks are actually in the Dow Jones. Dow Jones is making all-time new highs. Nike within Dow Jones is doing what? Microsoft, Nvidia, right? Look at UNH. UNH since 2025 has had a big drop down, and now we're down here. So none of these stocks that I'm just sharing with you here look nothing like the Dow Jones. So what we don't want to do is we don't want to say the stock market is, and then we have a view on the stock market. I say the S&P, the Dow Jones, the NASDAQ is. That's it. Then I go to UNH, and then I say, well, UNH is. Because there's opportunities for me to make money on the downside on these stocks. And there's actually one stock right now. I'm not going to share it here because I'm going to share it with my 1% club when we open back up again. So for you guys that are part of the 1% club, there's a beautiful setting up right now for a beautiful, what's called a shorter term trade that could last a couple of weeks to a month and could be a beautiful 300% return for us. So for you guys that are part of the 1% group, when I open back up again, meaning when we start back up again in a couple of days, I'm going to share that trade with you. So I'm not going to share it with the YouTube, but there's one trade right now that's actually bearish, meaning it's setting up to have another big drop soon. So I'm ready for I've got my setup. I've got my L-shaped trading pattern. I'm just looking for confirmation. purpose of me saying that is that even though I'm bullish the markets, the indices, that I don't actually have a biased view on the entire market because that's simply not true. And how I do that is I simply buy put options. So if I see a good setup on the downside, I just buy put options. To keep it really simple, and guys, I'm telling you right now, this is as simple as it gets. I have a really high quality, powerful trading setup first. Then I utilize options. Make sure I buy plenty of time. So, an example, 3 months, I'm buying in the money options. That's it. That's as far as I go. And you can be smart and go to the Greeks and the deltas and the time value and the intrinsic value and all this sort of stuff. Cool. Go down the path. You don't need to. And that's how I trade. That's how I trade from there. New Fed might take some time to impact the markets. Don't look at that, guys. Why are you guys focusing on something that may or may not impact at all? Who says it's going to impact the markets at all? And if it does, what does that even mean? Is it good? Is it bad? Is stock market go up? Are they going to freak out? See what I'm saying here? There's a big fat guess. Stop trading. Stop looking at the market based off of an idea that who knows if it is going to impact the markets. We can't rely on that. So stop relying on something that's just a story. It's just, yeah. There. Market recovery. Whatever. I'll look at charts. Hey, Sunshine, you're my girl. I like Sunshine. Why is it that out of all these people that watch me, it's people from Australia that got common sense? Down under's got common sense. Everyone else, I'm joking. I'm joking, by the way. Most of my coaching clients are actually from America. The people in my 1% club, which, by the way, is not open right now, so I'm not promoting it at all. It's just most of them from America, and then I have a few people all around the world. Oh, and people are asking me like with my coaching clients, I take coaching clients all around the world. I've got people from overseas, from Europe, United Kingdom, Mexico, Canada. So I have coaching clients in the group that are all around the world, by the way. Again, I don't have anything to sell here right now, apart from a $4 trading course. If you do want to buy something from me, and the best thing I do say is get the trading systems, which is this one here. But that's the only thing I have to sell here. You can get that. Or if you don't want to get that, but you do want some help, then go here and go johnsfreegift.com and grab the book here that I've got here. But apart from that, guys, my coaching program, I don't have anything. I'm just doing these live streams just to help you guys out. So let's go back to the stock market here for a minute. I'll eventually get to the 2026 trade. I think almost 2 hours. Damn. How good's that? How good is that? Tariffs were delayed, blah, 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 blah. Who gives a shit about that? Focus on the charts. What type of pattern do you trade on the charts? Tariffs and midterm elections and new government. Who gives a rat's ass? You can't trade off that anyway. you just, yeah, anyway. So let's go to here, okay? The big moves that I see coming next year is the first one is the interest rates I see is likely to start to move down. Now, here's the 10-year, okay? This is going to be the trigger for all this to start to come into play. Right now, we're in a big sort of squeezing up pattern through here, whatever, okay? And you can see this is the 10-year here, just going sideways. If the 10-year starts to break this 40, which on TC 2000, it's this 40. You put the decimal point between the first two numbers. So therefore, this 40 is 4%. Okay. If we get that breaking there, that's going to be the start of more the interest rates coming down from there. The 30-year is this right here. This is what's happening with the 30-year. So depending on what happens over the next couple of months, but the 30-year, now again, right now, 30-year is it's 48, but it's 4.8. You put the decimal point between the first two numbers. If it does continue, remember, squeezing up through here, if this thing starts to roll over and we start to break to 4.6, 4.4, then we're probably going to come down to this low to high threes. So low fours to high threes down the bottom here, down through here. So when all that happens, then I see this is the TLT market. When that happens, or if that happens, or even like in the TLT market, if the TLT market holds through here over the next couple of months, and we start to rise back above 90, when we actually start to break out of this level here, right? So this big downward movement through here, and this sort of downward somewhere through there, right? Somewhere through there. If we hold through here and we start to break up through here, that's going to be a breakout to the upside. And what that means now is we're breaking this triangle pattern, but we're breaking up. And then once we get back above 90, then that's going to be the trigger. Then I would say over the next 6 months, we're likely to start to see a nice shifting in lower rates. Bond market starts to rise. This is going to be the trigger this year to see these things start to happen. So for the, I have bought the TMF, by the way. This is TMF. I bought TMF here, right? People can do TLT if you want, but this is TLT. And then also I've got 12 months worth of time. I also bought options on TMF as well too for 12 months. I could be wrong, by the way. Ah. Oh man. Sounds like a good strategy to me. When there's a very big, strong bull market, just step in front of the train. Yeah, you'll be fine. It's not going to hurt. Oh. No wonder a lot of people lose a lot of money in the markets. Anyway. Yeah, Wyckoff's free. Cool. So that's the first thing there. Now, the big markets that are likely to start the next big moves is the energy sector for me. These are the markets here that it takes time for these things to build up. Right? But for me, on what I'm seeing here with the energy sector, if the XLE starts to break above this 50 level, that could be the start of at least I'd have to say a 6 to 12 month bull market. And I believe come next year, this time next year, we would have looked back and we will be talking about the energy sector going to the moon, right? We already talked about it with Bitcoin, and then it went to the moon, and then it went to down. We already talked about with gold, right? Gold, oh my goodness, which is interesting, right? There's always the flavor of the month. Have you noticed that? Always the flavor of the month. What is that? 12 months ago, it was Bitcoin, right? Bitcoin, oh my goodness, Bitcoin. And then 6 months ago, when, oh, gold. Now it's silver, right? All the herd follows the vertical spikes. So for me, I don't follow the herd. I look for patterns that tell me we're now likely to be starting that next move to the upside. And then this one here, so the energy sector / oil market. In particular, not the actual oil market itself, but the chart, which one I'm looking at here, USO. This here has the potential of being a really big move. And if you're only thinking short term over the next 3 to 6 weeks, so if you're only looking at the next 3 to 6 weeks for a trade, especially 3 weeks, you're probably thinking too short term, and therefore you're completely missing out on opportunities that's likely to make a big profit. And if you're trading like that and you're looking for a 3-week move, then I'm sorry to say, but you're never going to be in a position to make a really big profit out of the markets, because that's just where you are. So if you are trading, if you are looking for a 3-week move, one, you're not going to get in big profits. And secondly, if you're going to be doing that and looking for a short-term top, goodbye, bye, bye, bye. You're part of the 95% who don't make money in the markets. But what we see through here is all this sideways movement here, right? Because the market goes through these what's called phases, right? And look at this here. We go through these nothing phases through here for a while, and then we start to go through a trending phase. And then the market does this nothing phase for a while. And then when we do break, we start to go through these trending phases. So what I'm looking for is when a market does nothing for a while, I'm looking to get in on that next trending phase. And then the market does nothing for all this time, I'm looking to get in on the next trending phase. We're doing nothing here. If the market does start to break to the upside over the next 6 months, that tells me we're getting ready for another trending phase. And if so, there's a high probability of jumping in on a big move. Now, that doesn't look like much, by the way, this move here, but percentages from there to there, we're talking like a 70% move. You start to overlay options with that. Now we're talking. So they are the two markets, actually 3 markets. The bond market I see start to kick into play over the next 12 months as that thing starts to unfold. The energy sector. Now I'm not in the energy sector right now or USO because I don't know. I'm looking for the breakout first, right? I want to see a breakout. And so by looking at let's go to, so XOM in the energy sector is one of the stocks that I'm really focused on. I think the pattern here is what I look for, right? So I'm not making this stuff up, right, guys? It's the same thing. What is it? It's the energy building phase to a strong moving average. That's why I'm looking at the sector, because it's just this, but on a monthly chart. And therefore, we've had 3 years of energy building to a strong moving average. The same pattern I look for every time. And that tells me that once we start to break above this level up here, and it looks like we're trying to right now, that like XOM could potentially be making its way up to maybe even up there, maybe even shoot us over. The first target is 200. If it really starts to move, we could even possibly even overshoot up towards that 300 level. Now, that doesn't look like much, but if it does do that, we're talking like a 100% move. Now, this is a monthly chart, right? These are what could be happening over the next 12 months. So these are what's called big profit moves. But big profits don't come from 3 weeks. If you focus on 3 weeks, good luck with that, right? You need a good 6 to 12 months, or at least what I found, even on a short-term level for me, I need a good couple of months for this thing to really start to move in that direction. So that one there, and then also in an individual stock that's got this pattern, and that's this one here. I have no idea what this stock is about, or Chevron, it's a car company, I think. But I don't really care. All I do know, it's got the pattern here, right? The pattern is whenever I see a big energy building phase to a strong moving average, when it does break, especially after all this time here. So that's for me anyway. The way that I trade is, as you can see here, for you guys have been following me now for quite some time, it's the same thing. Whether it's a daily chart, a weekly chart, or a monthly chart, I'm looking for the energy building phase, right? And then away we go from there. So just give me a sec, guys. Alrighty. Alrighty. Let me. Man, have I been on for 2 hours? This is so good. Isn't it? So much information. XOM is strong already. Yeah, you are right. Yep. Or XOM may not be strong already, but we're definitely starting to move in the right direction. I wouldn't call it strong though. It's actually quite weak. Like look at this chart. Look at this chart down the bottom here. That's not strong. It's going up, but look at this here. We're very slowly going up to the upside, so it's not strong yet. Now remember, guys, when I mention things like XOM on a monthly chart, it's a monthly chart. That means it can go up for a couple of weeks or a month and then do nothing for a couple of months and then have another move. Like, put that into perspective, right? Whenever you think big move coming, understand it's a monthly chart. How a big move comes is what I mentioned there. So if you're looking to get in on a big move, say, for example, on XOM, you don't freak out by a 1 to 2 or a month or a couple of months sideways movement or a pullback. Because yeah. Just understand that. By the way, FYI, I'm not in these markets right now. I haven't got my confirmation to get involved with it yet. So, but I'm just sharing with you. I'm in TMF, yes. I'm in the SPY, yes. But these other markets, I'm just waiting for. XLB. Let's go look at XLB. XLB. XRB is a good potential to go up. Yeah, it's hard to say, isn't it? Because it's really done nothing for all this time here. And it's not really channeling, it's actually quite volatile. So, yeah, it's hard to say. Yeah, exactly right. Sunshine girl. The charts, a beauty. XOM, right? Chevron, oil, petroleum, energy again. Exactly, yes. So as you can see, right, Sunshine girl, and you've been following me now for a while, right? So the reason why this has the potential of having a big move is not because I'm trying to make something up, but just like what gold did, if I look at why gold had such a big move, because it's all the same thing. Let me bring on the GOD here. The GOD, right? So gold's had a big move for a couple of years now because it spent 3 years doing nothing. Does that make sense? Does it make sense, Sunshine Girl? So if you think it from an energy perspective, yeah, we've had a big move for 2 years out of gold, but it spent 3 years building the energy first, and then now it's been releasing that energy in a nice good upward trend for the last couple of years. So I'm looking for these energy building phase to potentially jump on that next big move from there. That's what it's all about. Energy building. And we built all this energy for 3 years. This is a monthly chart out of gold. And then when we broke out, we started to release it, and that's what caused this big, beautiful upward trend for the last couple of years. So that's all I'm looking for. I'm not trying to be smart and say fundamentally and economically and data and interest rates, and I don't know. I just know when the market is going sideways like this and it's building a lot of energy, when we do break, we're likely to be releasing that energy and we go for the next move. And this is what's so powerful about this, is what I'm teaching here is in perspective of if you see this from a daily chart and you get a good energy building phase from a daily chart perspective, right? Just like gold did back here. You go through these energy building phases, energy building phase, energy building phase. When the energy building phase is finished, it gives us a high probability of seeing that next leg to the upside. But that's daily chart, right? Then you can go to the weekly charts, and then you go to monthly charts. And the time is relevant, right? So if we have something that does nothing for 3 years and then breaks out, there's a massive probability, just like gold, that that's likely to be a good move for, depending on the movement, right? But it's good 6 months, 12 months, maybe a couple of years. So depending on the time frame there, but it works time and time again. Or doesn't work 100%. I do have my losing trades, and it doesn't always follow through. But that's where you want this with a strong moving average. Because, bit of FYI for you guys, if you look at the Russell, look at this here. Let me show you this here. How come the Russell had the energy building phase up here? Look at this here. Went straight up, had a big energy building phase, but it created the false breakout. Ooh. Oh. This breakout here was a false breakout because the moving average was flat. Look at the moving average here. It's flat. That's why we want to see the energy building with a strong moving average. That's the key. But if we have a sideways and we have too much of a sideways, this now becomes false breakout territory because the moving average is now flat. So when we did get a breakout, I do know this because I actually traded this breakout here. I made a little bit of money on the trade, but yeah, I traded that breakout there. So I'll show you what I did. So same thing, right? I saw this. I actually traded this. That's why I remember it very, very clearly, right? So I traded this level here. I saw this being the energy building phase through here, all through there. And when we got the breakout here, I traded it right there. So I traded it right there. It went up, 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 came back down. And as it started failing, I think through here, I'm like, this is not working anymore. So I got out for a small profit. And then the whole thing, that was the last move before the big drop. And it was at that time, I'm like, that doesn't make sense. Look at all this time going sideways and then broke out and it failed. Oh my, that doesn't make sense. So I went to town like looking for like, surely there was something there to say, even though we had this big sideways movement, I thought, and this is when I was really like, and this is where I learned the power of the moving average and the momentum behind it. Because we could have this here and then the failing, but as you can see, then we had this big downturn from here. So it's important to have the sideways with a strong moving average. But when we start to roll over, then this is where it gets really, really dangerous here. And as you can see here, that yeah, I did have a short-term move to the upside, but it failed really quickly because the moving average was flat. That's where, like right now, if you see what's going on right now with the Russell, there is no flattening of the moving average at all. It's straight up. Surely it looks like the top's in. So, Sunshine Girl, I'm not sure if you're still around, but I hope that makes sense for you, Sunshine Girl, as well too. So just keep an eye on that whenever you're looking at the big energy building phases, because it can be doing that from there. What's all the Mr. Pete? You said yes, they are. XOM is the strongest of the bunch. Well, they're all doing the same pattern, so they're all strong. Oh, awesome. So they're all strong, yeah. Tube, go John. As soon as Stranger Things is over, I'm watching this video. Happy New Year, traders. Thank you for your hard work, John. Oh, no problem, man. No problem. I still can't believe I'm going. I must have done it like 10 hours in the last week of live tradings. Anyway, there's so much information, guys, I can teach you about these markets. And when you start to put these things together, you start to see things, understand things, and make good decisions. And that's what it's all about. And from there, you can hopefully move in the right direction. And my job is just to help you understand these markets on a deepest level a bit more by understanding these things. Like, don't call a top now when we're clearing a very big, strong market. But sometimes there's Muppets in the comment section that still want to do it. Oh. Anyway. Yeah. Hi, John. Do you have a maximum number of trades on at once or a percentage of count? Maximum trades, because I don't trade a lot myself. Like, for example, right now I have 2 trades going on right now. I have the SP 500 that I got into. You guys know what I did. I started talking about the S&P 500. And when it was down through here, that's when I started talking about it. Down through there, which is down through here. And I'm also, from a trading perspective, that, and then also TMF, which is a bit more of a longer term trade. So there's not a lot of trades at once that I'm actually getting involved with. I'm very, very, very specific about the trades that I'm getting involved with. So, no, I think the maximum number that I've ever had been in is probably 4 at one time. But like, even with these trades here, right? The SP 500, I have a 6-month view of this. TMF, I think it's going to take at least 1 year, or within that 1 year, I see that playing out, the TMF position. I don't know about now, but within the next 12 months. Same with the SPY. I think within the next 6 months, we're going to see that there. So that's what there's to. But that's part of my portfolio with my trading account. But I still have a lot left there, ready for other opportunities that I'm seeing right now. And there's many really good opportunities that are not 6 months and 12 months like SPY TMF, but they're trades that could last anywhere from a couple of weeks to a couple of months. These types of positions from there. So if you are trading, if you have a lot going on with a trading account, then I promise you, you're not really trading based off a plan. You're trading based off just, I promise you, if you had, say, 5 going on at once, there's not really a lot of, you want to be a bit more discipline behind the trading opportunities that you take. That's all. I don't like to trade a lot, but I like to trade high quality myself. Even Bitcoin and Ethereum could start an upmove from here. Wow. Maybe. Flip a coin. Flip that coin. Man, there's a lot of guessing here. What you want to do, guys, if you want to be successful in trading the markets and you do want to take a position for 3 to 6 weeks, then having an idea, if you say I'm looking for a trade that's going to last 3 weeks, maybe 6 weeks, and that's what you want to be looking for, and then you say, well, the Fed's going to cause this. That's not a system. That's so unbalanced. The Fed's going to do this to that, and that's your position there. Remember, when you go to the market, you trade based off patterns from a chart. not based off macroeconomics. What I see is so many traders, they'll be like, I'm short in the stock market now because of the debt bubble and the repo market and the midterm elections, and they short the markets. And then 2 weeks later, they're getting out because the chart's gone against them. I'm like, so hang on a minute. You got in because of these macroeconomics, apparently, that you thought, and then now you're getting out because of the chart. What do you do when the moving average on the daily moving average is flat, but on the weekly it's in a consolidation phase? Well, that's going to happen sometimes. Meaning that in a very big, strong bull market, like gold, when you do get these sideways consolidation phases, a lot of the times the 52 on the daily charts is going to be flat. That's where the main trend for me is always the weekly charts. Gaurav Mahash 369, you sound really smart, man. You sound really intelligent. Why don't you start doing some videos like I'm doing now and start putting yourself out there and making these calls? Because I'm pretty sure if you're really successful at what you do and you do really well, I'm pretty sure everyone here would actually like that. Instead of doing this comment section, you've got a YouTube channel. Right? Put some videos out there. Make some calls. Don't delete the video, by the way. Make some calls. Like call the short the stock market now. So that's the best thing to do. Instead of being a little chat box, little monkey man, like put your neck out there. If you're so successful at what you do, and you can have long-term success in what you teach, then please teach us all. I'd love to hear from you. I'd love to hear how you're 30% right and 70% wrong. Because yeah. So once again, traders, what I do is that I don't teach you how to make up a story of how you can create a story right now. I'm all about teaching you things you can use for the rest of your life. That's not a gimmick or a fad or something like that. Okay. So what's in store for 2026, guys? What's in store for 2026? Let's go to this one here. Don't short now. Wait 3 weeks. Wow. Jeez. I've made so much money in my trading career, like a lot of money. And I've never met anyone that's been able to do that, by the way. So don't focus on that. That's a big guess. Anyway, Dow Jones, the Russell. Again, I see the Russell up. Well, the next 6 months or so, I see the Russell up towards that 300 level. That's the channel projected target, by the way. I've talked about this before. Right? So I see, yeah. So I see Russell being very strong overall. Look at this here, guys. Beautiful. Look at that there. Nice breakout, higher low. We just made a higher high. So we're starting to see this thing overall, right? And this is one of the big things, guys, about reading the charts is, as you can see, when I squeeze my charts up like this, I can see the trend of the market. What you don't want to be doing is doing this and looking at the bars like that, and there's the candlestick there. It's like you're too close, way, way, way too close. What you want to be doing, you want to be looking at the big picture. There we go. Where is that guy? Oh, there it is. Oh, there it is. Yeah, cool. Right there, cool. So, very strong, guys. Everything's setting up so strong. Dow Jones, look at this here. Even just recently just made another higher low, made a new high. Everything's still really strong here. NASDAQ. Look at NASDAQ. NASDAQ just broke out of this channel here. It's hit a resistance point, and now it's holding here. If the NASDAQ does start to break above, what's that level there? Probably that 26,000 level. If we hold and we start to break up here, guys, oh my goodness. The target for that would be, if we just measure from the high to the low, and we measure from the breakout from there to there. So therefore, we could start to see a target based off that pattern there would be around the 30,000 level there. So that's another 20% rise from there. That's a target. Doesn't mean it's going to get there. And secondly, it doesn't mean it's going to stop there. I've seen so many targets like that there, and it just keeps going and going and going and going, right? But right now, very bullish. Especially breaking out of this resistance level and now making a support. Major resistance in the past has now become support and a higher low, and we're still in an upward trend. Beautiful. And then my baby, I say my baby because this is the one that I'm actually long right now, is the same thing. Look at that here. Look at all of this here. Look at all that resistance there. All that resistance all through there. Now look what happened just recently. Major resistance now became support. We're still in an upward trend making higher lows. We're part of the energy building phase. Major resistance is now becoming support. Higher lows, still in a very strong upward trend, part of an energy building phase. We break above 7,000, and this is about to see some fireworks. Fireworks. Just such a beautiful looking chart. Mm-hmm. Mm-hmm. Oh, look at platinum, eh? Platinum destroyed. Oh man, the transportation average could be. Oh man, this could be the start of a really nice breakout here. So we see it's actually we held through here, but we're just holding through here now. So if this does continue to hold and then we start to break above, say, 78 on this IYT, the transportation average index ETF, wow, we're probably going to see a big move off this here. We can see that. No, that's not it. Possibly through there. Definitely through there. Yeah. Transportation average is actually looking quite good. It's already broke out. So, alrighty, guys, that is it for me today. 2.5 hours, guys. 2.5 hours. Happy New Year to everyone. Happy New Year to everyone. All right, guys, that's it for me today. Have an amazing day, everybody. Speak to you guys real soon.